hope you get what I mean. So moving on to today's session. Okay, let me try to make it smaller. Moving on to today's session. I hope you got the conclusion on the live trading for today. Moving on to today's class session, we'll be talking about the M and W patterns. So we have rules for the M and W pattern. And what are the rules? We first look for an outside structure, that is the first leg. An outside structure is simply the first leg of a W, just the one as we saw here, something like this here, something like that. That's the first leg. That's an outside structure, but then we'll then have to wait for another leg to present here, but then for this one it didn't. But that's what I mean by an outside structure, or something like this, something that's noticeable. This is an outside structure, something like this. Then we'll be expecting a test to the outside structure, forming a W. That's an outside structure. So price so yes, I'm going to do that, but I'm just doing that for those who are going to be doing the advanced section with me. So that's why I'm making this video, so that when I'll be talking more about the advanced chapter on DTMM, those who have started with me on this BTMM part will now understand what I'm saying. That's why I chose Jeff's particular. So stick around. So price will then go back above and below the 13 EMA through the appendix. I hope you get this. The second leg with the nameable, remember what we talked about yesterday on the candlestick patterns that are significant and very important. The railroad, evening stars, and morning stars, they are very important. Then there is the shift candle. There's the shift candle. The shift candle, which is approximately 12 to 15 pips. That's the significant. Moving on, the entry rules, these are the important ones. These are very important. The second leg, for those who have done BTMM, for those who are still getting into BTMM, just make sure you get this part once more. Revision always makes it better. The second leg candle, close above or below the 13 EMA. I think we have been saying this from today's live session, from yesterday's session. We've been talking about this. This is very important. Introduce the second leg close above or below the 13 EMA after the shift candle. After the shift candle, I'll be showing you trades on this. I'll be showing you trades on this. Well, a shift candle is a very significant candle that is used by the market makers to shift away from trapped traders. That is the same candle that is used by the market makers to punish traders who would have removed their stop losses, hoping that price will turn their way. So the market makers use that shift candles to rush away from their trades, from their entries, and just painting them until the margin call their trades. That's the main purpose. That's the main purpose for the shift candle. That is a shifting candle. That's a shift candle. I'll show you what it looks like so that you recognize it. The second leg, nameable pattern. The second leg must under the second leg there must be a nameable pattern candle close. Those are the shifting candle, the railroad, the evening and morning star. Those are the ones that we mean by the statement. That's meant by the statement there. Those are the ones that's meant by the statement there. The first chart right here. So as you can see, 3 swipes to the low. There's 3 swipes in the low. These are happening as the market makers are stop hunting traders and giving us an outside structure, and a first leg being formed here, at the same time bouncing off the 200 EMA with this railroad candlestick pattern. As we always talk about this, railroad is very important. I asked you guys to stick this to your walls so that you remember this. Railroad candlestick pattern. So price then went on giving us an apex right here, indicated here, then came down give us a second leg right here, and then trapping traders. Then this presented in the form of our shifting candle right here. For those who wanted to know more of the shifting candle, this presented as the shifting candle right here. But then the trade was entered here due to the railroad candles here again on the second leg, as you can see there. But this one was the shifting candle, as you can see. So very significant and important candlestick patterns. Then price went up 60 pips, then up to 100 pips. Then there was also TDI confirmation. There is always TDI confirmation, guys. There is always TDI confirmation where the TDI RSI close above the market baseline. That's also is significant and should always be taken note of. Moving on. So here on this particular trade, short traders were trapped, were stop hunted to the downside. There was a stop and low here. Let me indicate. There was a stop and low, trapping traders, forming an outside structure again, then giving us this morning star here, and at the same time price closing above the 13. Then price went on to present a shifting candle. Those who wanted to know about the shifting candle, so you could have taken a trade here because this was during London Open. Then it shift whilst you're in because you are a DTMM trader. Then price then went on to trap longs as well. This usually happens in the market. The market makers sometimes might not just trap traders in one direction, but they might also want to trap traders in both directions so that they make more profit. That's their goal. Their goal is just to make money and take money from both sellers and buyers at the same time, but sometimes they may just choose one particular type of traders at that or for that pay due to the market sentiment, as in the comparison between the number of sellers and number of buyers for that particular pay. So that must also be taken really particular care on. So we then went on to see price give us an M here and giving us another second leg to a second leg. There is what's called a second leg to a second leg. We'll talk about that type of M's. As you can see, giving us 3 reaches to the M right there. So that's how it forms. Then price went on for our entry. Now we now see that price formed this railroad right here, and we entered here, and our stop loss was 15 pips away. Then our take profit 30 pips, as we talked about it yesterday, but this time it gave us 35. So our exit would be at 30 pips. For us DTM traders would have profited. So for 30 pips, you just need, with enough confidence, enough accuracy and consistency, you just need to just ramp up the position sizes and just take the 30 pips, guys. It will be more than enough. It will be just enough. It will just be the same with those waiting for 300 pips move and whatever. But then it will be more because this 30 pips move happen every day. But then the 300 pips move don't happen every day. I hope you get what I mean. And I hope you get why this strategy is sort of like is the best. For this particular trade, as you can see, I'm sure it's kind of easy to you all now, to all of you now. Accumulation is initiation, stop band, M to the stop band, close below the 13 EMA, then close below the 50 EMA. The trade was made here. The stop loss was 15 pips away. Cleared the EMAs. Yes, this has to be also taken care of all the time. The EMAs has to be cleared. Please, EMAs has to be cleared. EMAs are as important. The same way we consider railroads and color codifications in this strategy, EMAs are also as important. Not EMA crosses in particular, but then the clearing EMA, meaning closing above or below the EMAs. That's what we mean by clearing. The same thing that's happened. So for this particular, for this area right here, we can say that price has cleared for this, for the reason for the entry right here. Price cleared the 13 EMA and the 50 EMA. So that's what you mean by clear the EMAs. They have to be cleared all the time. So after the EMAs has been cleared, we enter here. Our 30 pips take profit will be here. Then we also look for, there's always TDI confirmation. The RSI crossing the market baseline. You should always check for this. So they should be counted as confirmation. So 30 pips, then price went on to give us 50 pips for those who would have stayed in the trade. But then for us, we would have opted out at 30 pips and pocketed out 30 pips. Moving on, same thing, stop on to the low, outside structure, then we wait for EMAs to be cleared. From this point, when we're at this point, we now wait for EMAs to be cleared. When you're at this point, like this area right here, during this time, we will not have entered any trades because we have EMAs waiting. That is to be cleared. These ones, they will have to be cleared. It's either they are cleared or they are bounced off from. I hope you get what I mean. It's either they are cleared or price bounces off them. Please take note and please keep this in mind. It's either they are cleared or price bounces off them. That's only when we enter trades. We don't just enter because we have an M or W, but then if the EMAs are also closed by this, like the same way they are here, we need to wait for them to either be cleared or to be bounced, or for price to bounce off them. So what happened? Price then pushed up to the upside, cleared the 50. We're now waiting for clearance of the 200. Then we noticed that price closed above, but then the next candle closed back inside, meaning there was a bounce forming, gave us an apex here. This was the first leg. Then price came back to test the first leg, and it then closed above the 200, then closed back below the 200, just below the 200, and forming a beautiful divergence trade. There was a beautiful divergence, as you can see with this white line. There was a divergence right here, beautiful divergence. Now we have confirmation one, divergence, bounce of the EMA, especially after this shifting candle. That's why this entry, the entry was made here after this shifting candle, after the shifting candle. Oh, after the shifting candle here, after the shifting candle. That's why our entry was made there. So our confirmation was, we had TDI confirmation, divergence, then the RSI closing below the market baseline, a crossover of the RSI and the market baseline, shifting candle, W, bounce off the 200, closed below the 50, clearing. There was clearance of the EMAs, as we talked about. EMAs have to be cleared. The 200 was cleared by this candle, then the 50 and the 13 were cleared by this shifting candle right here. That's why our entry was here. Then we just wait for price to just move down. We're sure now that price will go down, and definitely it went down. Our exit would be around here for 30 pips. Then price pushed extra 60 pips. For those who have put their stop loss at break even at 30 pips, they would have gotten out at 60. They would have gotten out at 60. So the difference between sharp M and W, there's what's called weak and M. There's what's called weak and strong M's and W's. As you can see, this is as clear. It means as it is, like literally as it is. That a W that's sort of like fading, it's weak. A W or M that's sort of like fading, it is weak. It is weak. If you see a W and M or M that is like this, taking too much time to form, there is no outside structure, and it's just lazy like this, it's weak. This one too is weak. This one is the strong one. These are the types of M and W that we are looking for, that we'll be looking for. These ones are the ones that are sharp and are the ones that we are looking for. These types of W's. So pay particular attention for that, and are the ones that we'll be looking for in price. Patience and consistency. I talked about this yesterday, and I'm going to talk about it now. Patience and consistency. Patience is the main difference between profitable traders and losing traders. If you want to move from being a losing trader into a winning trader, a profitable trader, and raise your winning percentage, you need to be patient. I'm sure you have heard of this and you are hearing it again here. Patient, you need to be patient. Then consistency comes after you are patient. Then if your patience is consistent, you gain consistency, and it is from patience and consistency that you become profitable. I hope I was slow enough for you to understand and get what I was trying to put out there. So you can go through this, be patient when waiting for setups, When all the rules are met, yes, don't be afraid to pull the trigger. Don't be afraid. You must be confident. There should be confidence also. There should be confidence too. Confidence must be involved. Confidence in the strategy, confidence in yourself, confidence in everything. Confidence. So this, for 30 pips a day when trading one pay, this is some simple math right here. For trading one, when trading one pay, getting 30 pips a day, that's 150 pips a week, and that's 600 pips per month. With a lot size of 0.1, that's a profit of 600, guys. With two pairs, this is the type of trading that I do. I trade two pairs, 60 pips a day, 300 pips per week, 1,200 per month, and that's $1,200, guys. Just as easy as that. Just as easy as that. And this is consistent. Like, this is consistent. Imagine getting this amount of money, like, with just sticking to the rules and being patient with yourself and with the strategy. Just imagine that. Just imagine that. That's a lot, guys. It's a lot. It's a lot. Having your principles pay you, having the strategy and your consistency and patience and pay you, it will be all paying you this amount, 1,200, for just being patient, consistent in the strategy, and confident in yourself and the strategy. Imagine that. This is possible. The figures get higher with pairs. Imagine when you're trading 4 now, 120 per day, 600. This is a lot, guys. This is a lot. This is just a lot. The math is easy and the trading is easy if you just stick and follow the rules and you are not greedy. You get to this level. You get to this level. This is simple. It's achievable. It's happening. It can happen. It's possible. It's possible. It's possible. Ramping up the lot size now, due to your confidence in the strategy and in yourself, you ramp up the lot sizes. That's the goal. That's our goal now. We now need to work on the confidence and the consistency. That's when the consistency comes into place. So it is only from consistency and accuracy of the strategy. Like, it comes from back testing and just learning the strategy as a whole. That's when we can ramp up the lot sizes. When you ramp up the lot size, the figures just gets bigger, guys. It just continue getting bigger and bigger and bigger. And this will be just rewarding you for being able to stick to your rules, for being able to stick to the strategy, for being confident in yourself in strategy. When you ramp up more to one standard, guys, you can see with 4 pairs, that's 24,000 USD. What will you be getting with 24,000? That's a lot. Depending with where you're from, that's a lot. With anywhere you're from, that's a lot. 24, just a lot. Whether in Africa, whether in America, 24K is just a lot. So it's achievable, guys. These figures are so normal and are so achievable. And with this strategy, with forex trading, this is achievable. And with DTMM worse, it even makes it worse. It's very close to achievable. You just need to stick to the rules, to the strategy, and develop the consistency, guys. Develop the consistency. So thank you very much for joining. I'm going to open the chat box for now. I closed it because it was interfering a bit, so I have opened it. You guys can ask questions on where you want to ask and where you want to know. Those with questions, please, it's your time now. You have about 5 minutes. You have about 5 minutes. Which pairs do I trade? I trade GU and GJ. This EU trade and EG was just requests from, let me close them now. We're just requests from people who joined the live. What do cause of food represent? That means code of food is code of foods. It's code of foods. Let me show you what it looks like. It's code of foods. This one. Code of food. Exactly, code of food. Thank you. Right here. Code of food. Looking like a code of food. When candles look like a code of food, can you do over the TDI indicator one more time? Okay, about the TDI indicator, we'll talk about it. I'm going to make a particular video about the TDI indicator, about many about the EMAs. I'm going to do a particular video about that. I'm going to do particular videos about each indicators, guys. So don't worry about those. We'll talk about them. Shifting candle. There was someone who was asking about the shifting candle. Right here. It's right here. Also the TDI Pro and Plus, which in your view, okay, with on my view about the TDI Pro and Plus, they're just the same. TDI is just TDI to me. So long it just shows me the crossovers. So long it just shows me the crossover, that's fine with me. Can you please share the source of Jeff's slides so that we can download them? Okay, I will do that. What's the win rate if you follow the rules? I'm 100% sure it's above 50, and maybe let me put it at 80. I'm 100% sure. Let me put it at 80. Divergence, yes. When I'll be talking about the TDL, that's when I'll talk about the divergence. My bias on GBP, JPY. Stay tuned. Join tomorrow's live trading session. That's when we'll be talking about the trades. Right now, I don't like to check the bias because it's against the rules of DTMM. We only trade towards the London and the New York. Now it's past New York now. So I don't like to check trades. I don't like to check the charts. Did you win your trades today? Well, today I didn't enter trades using this strategy. I think I entered a GJ trade, yeah, from this point to this point. So guys, until tomorrow, let's meet again tomorrow, same time, same place, right? Yeah, I'll post the links in the same channels that I posted them. Thank you for joining. Thank you for being with me, for supporting me by joining and just giving the figures. Yes, London session tomorrow. That's when we'll be doing the live trading session. London tomorrow. Stay tuned for the link. I'll post the link in the channel. Stay tuned. Thank you for joining. Lots of love to you all. You're welcome. Those are saying thank you. You're welcome. New member. Oh, welcome. We do like new members. So guys, please do share. Invite your friends, family, traders that you know. Let's grow together, guys. Let's grow. Invite them. Look for the links. The links are there all over in the channel. Grow. Please share, guys. We're about 33 of us right now. If you share, if each one tomorrow, each one must bring a friend, or a relative. Make it 2 of you or your neighbor. Yes, I'll post the slides. I'll send the slides, don't worry. Tomorrow, bring a friend, bring a relative. Thank you. God bless you all.